Apple versus Microsoft. Who doesn't like a healthy dose of competition, right? Who's the Mac people out there? Who are the Windows people out there? Me personally, I'm a Mac person. Let's take a look at each stock and see what the best trade is, right? We're going to walk through it together using my platform, Think or Swim. Check it out. Now, check it out. We're going to have Apple on the left side of the screen. We're going to have Microsoft on the right side of the screen. First, we're going to look at a 1-year chart. We're just going to get an idea of where the stocks have been trading for the past 1 year. And you'll notice a couple things right off the bat. Because Microsoft and Apple are kind of similar related type companies, they're both technology companies, right? Typically, they're what we call correlated, meaning that oftentimes if Apple goes up, Microsoft goes up. If Apple goes down, Microsoft goes down, but they are a little bit different, as you can see from the chart here. Here's Apple the past year, here's Microsoft the past year. But let's take a look and see what the best trade is. We're going to look at selling a put. What is selling a put? Selling a put is so amazing. What that means is we're taking in premium and we're committing to buy a stock that we like anyway if it goes down. So worst case scenario, we end up buying the stock on sale now. So if you like the stock anyway, why would you pay sticker price for it? It's kind of like going to a car dealership. You want to buy a new car and you check out this new Porsche 911. Well, do you want to pay the sticker price on the window, or do you want to like negotiate with the salesman and get a better deal? This is the same thing. Why pay sticker price on a stock when you don't have to? Just sell a put. So let's take a look and calculate. Now Apple, we're going to look at a couple of things. Apple, first of all, Apple is trading right here. I have the stocks on the left as well. Apple is trading at $253 per share. Microsoft is trading at $515 per share. So you see right off the bat, Apple's a lot lower of a stock. But that doesn't mean that it's better or not as good. We want to calculate the rate of return. Before we enter a trade, we always want to calculate the rate of return. How much money are we making? And we want to annualize that out because we want to compare apples to apples. Haha, see what I did there? Apples to apples. Okay, let's check it out. So I'm going to pull up my options chain, right? Here's my options chain. And I am going to look at the strike prices down the middle, and then the puts are on the right-hand side of the page. This, again, is my trading platform, Thinkorswim. If you trade with somebody else, it might look a little bit different, but you're going to have the same sort of information. Now, I'm going to take a look at, right now, a $250 put for Apple. And what that means is I'm committing to buy 100 shares if the stock drops below $250 before the expiration date of October 3rd. Me personally, I always sell weekly puts. I want to create weekly income for myself. I don't want to tie up my capital for an extended period of time. Plus, I don't know what the market's going to do next week, next month, 2 months from now, 6 months from now. So I want to have weekly short-term contracts. So let's take a look and see how much money this is trading for. Well, we can see a $250 put. If we go to this last trade column here, it's trading for $130, right? So that means $130 gets dropped into our bank account right away. We can spend that if we want. It's so different than buying stock. You stock traders out there, I'm not saying stock is bad, but when you just buy stock and you're not trading options along with it, you're basically spending your money on stock, hoping and praying it goes up, and waiting some infinite amount of time before you can sell those shares and capture that money. When we trade options, we're capturing that cash in our pocket right away. So much better. So now we can see this pricing keeps changing, right? Because the market's open right now, so it's going up and it's going down. So we're going to take a look at the $250 put that expires this Friday. Right now it's trading for $133, right? And we're also going to look at the delta column. What is delta? Delta is kind of like, oh my gosh, it's like the cheat sheet notes to a test. It's kind of like, what's the approximate statistical likelihood the stock is going to fall to that price before the expiration date? So you'll notice on this contract, it's only about 30%. So it's 30% likely that the stock is going to finish below 250 before the expiration date. Now that means it's more likely than not that it's not going to drop below that 250. Either way, we keep the premium. So let's calculate the rate of return, right? I'm going to pull up a calculator. I'm going to show you how easy this is. So if we're making $133, and then we have to divide that by how much money we have to put up to make the trade. So if we're selling a $250 put, we're committing to $25,000. That's called a cash secured put. That means we're not using margin. We're using all of our own money. We're not using any of the bank money, right? So I'm going to divide $133 our premium divided by 25,000. And the reason why it's 25,000 is because we're committing to buy 100 shares at $250 per share. 100 times $250 is 25,000. So that gives us this as a rate of return. But remember, guys, we're only holding this particular contract for 1 week, right? Today's Monday. We're looking at a Friday, October 3rd expiration. So we want to annualize that number out. How do we do that? We simply multiply by 52 because there's 52 weeks in a year. So that gives us a 27% rate of return on our money. Now that's pretty good, right? Is that good? Is that not good? I don't know. Let's compare it against Microsoft and let's see who the winner is going to be. Stay till the end. So let's take a look at Microsoft now, right? So Microsoft, it's trading for a lot more money, right? $515 per share. And let's look at a similar kind of contract, right? So we're going to look at a $510 put because it's got a similar delta, 31. So it's 31% approximate likelihood that the stock is going to drop below that price before it expires. And this contract is trading at $232. Wow. So that's a lot more money than what we can get with an Apple contract. So are we going to say that that trade is better yet? No, we're going to calculate the rate of return because we're not just going to look at how much money we're going to make, but we're going to look at how much return we're making on our money. We have to look at the whole picture, right? So let's compare apples to apples. See what I did there? So we were making 27% on our Apple trade. Let's take a look and see what we're going to make on our Microsoft trade. So this contract, the 510 put, that means we're committing to buy 100 shares if the price drops below 510 before the expiration date. How much are we putting up? If we have to make that trade, if we're not using any of the bank money, $51,000. $510 is how much we're going to pay for the shares. Times 100 shares, each contract always has 100 shares. That's 51,000. And right now this is trading for $220. So we're going to divide 220 divided by 51,000. And that gives us this as a rate of return, right? So just like in the Apple trade, we're going to multiply by 52 because there's 52 weeks in a year. And that gives us an annualized rate of return of 22%. So 27% with the Apple trade, 22% with the Microsoft trade. Even though we're making more money on Microsoft, Apple, based on the mathematics, is the better trade. What did you guys think? Did you think Apple was going to win? I don't know. I was hoping Apple was going to win because I'm more of a Mac girl myself. Hit me up in the comments. Let me know, are you a Mac person? Are you a Windows person? Let me know in the comments. Do you trade puts? Do you trade covered calls? What are your favorite stocks? Like this video if it was helpful, share it with a friend, and be sure to subscribe because I'm putting up a video each and every single day with all kinds of trading tips. Anyway, hope this helps. Cheers for now.